talk to me about that for a moment. How Brian, for example, as an individual, can handle that emergency call at night of mama amevunjika mguu, we are taking her to hospital XYZ, we need to have this done.
Yeah, and to be honest, my de facto answer is always plan for emergencies. But we're also talking about a scenario where we've not been taught to plan for emergencies and save for emergencies. However, I'll still make a plug for that in terms of anyone who's listening and is thinking, what can I start doing today to be ready for that future state? Think of the 4 examples I gave of how you split your savings.
Okay.
The first one, which is
Welcome back to FILIT, Financial Literacy Conversations with me, Brian Jodutieno. You can call me Branji, and we are live at the Nation Media Podcasts. Today we are talking about instant gratifications, those things that are making you not achieve your financial goals. And there will be no other better guest to talk about this than a person from the industry who is actually in the practice of digital lending. You all know Tala. If you're in the Kenyan market, you all know Tala by now. And this lady also is a lady of many fasts. And one of those key fasts is that she's the first female guest I am hosting on the podcast. Imagine on this episode. And Tala Mumbi from Tala is here with us. She'll introduce herself. Good to see you again from way back.
Yeah, amazing to see you. And you'll need to tell us first why I'm the first female. But anyway, I'm joking.
Kiburi ni ya nini?
No, it's kiburi, it's shade I'm throwing. But anyway, pleasure to be here. My name is Mumbi. I'm the director of growth at Tala.
Yep.
So quick intro about Tala. We're the largest private lender in this market. We've been in existence since 2014, so about 8 years now. And yeah, I'm looking forward to sharing some tidbits of what we've learned in the market so far.
But hey, congratulations, you guys recently got the certification from CBK. Tell us about that in the regulatory environment and how it's looking like for you guys right now.
Yeah, for sure. I would say the market right now is moving into almost like a phase 2 of growth, where, if you think about 2014 backwards, if someone needed a loan, you had to go to a bank, present financial statements, present your banking slips, and pay slips, etc. So this is where the tech and financial services such as Tala actually came to solve for this problem. So the question was, how can we use alternative data sources to underwrite you? So what I mean by that is M-Pesa was coming into the market, etc. So a lot of people who didn't even have bank accounts were using M-Pesa. So how can I actually understand your financial behavior and use that to say, I can give Brian a loan? So that's a big innovation behind digital credit. And it was a way of bringing all these people who'd been left out of the formal financial economy into into this new normal, if I would call it that. So if you think about, back to your question, fast forward to where we are right now. As of, I think last year, we had 300 plus digital lenders in Kenya. That's a lot in an unregulated market. So anyone can come in and do anything, which is not a good thing at all. A good phenomenon, and what this actually led to, there was a lot of consumer safety issues. And as Tala, part of the challenge we were facing is, I keep telling guys, we're like Omo or Blue Band. It doesn't matter what is happening, people will say Tala.
Everyone is going to say
So it became a really key thing for us to work with regulators and the central bank to say, how can we actually create regulation for this industry so that everyone is actually licensed, and as such, Kenyans can actually know this is a good lender, this is a bad lender, this is how we should actually select which lender to borrow from. So right now, you'll see the central bank is sitting with a lot of applications, well over 280 of them right now, and you'll keep seeing lists coming out. I think there's another one that was just released this week. Of about, I think, 10 to 12 lenders. So the industry is growing. So the long story short there is, we're moving to a next phase of growth, which is advancing consumer safety. Let's make sure guys are safe while they're trying to get their loans, and they know who to actually get their loans from.
Talking of evolution, I mean, it's a beautiful thing that you're talking about financial inclusion for the informal sector and all that. Let's handle this new phase of Tala where you're saying, you know what, let's have a relationship with the client, and you're coming up with financial literacy conversations. Talk to us about that. What phenomenon? What was that one thing that led the board or the leadership of Tala to say, I guess we now need to evolve from just that quote unquote predatory relationship that is seen between the lender and the borrower to now create a relationship. Talk to us about that, the financial literacy program, Tala.
Yeah, for sure. And I would also say, number one, Tala, by virtue of being a mission-driven company, our goal has always been to maintain a relationship with consumers. Okay. So for us, it's not a shift that has happened within Tala. It's a shift that's happened in the industry. Yep. So, I don't know if I shared this, but, Tala was actually founded by a lady called Shivani, and she was at the time working at the UN. Okay. And what she realized is, and they were doing research across different emerging markets. So think Nigeria, India, Kenya, etc. And quickly realized that there was a gap, and that a lot of people were actually, looking for solutions that could serve them in terms of offering them credit. So fast forward to once Tala has launched, we've been in the market for 4 years. Financial literacy has changed. Yeah. So that is where you'll see us. It almost looks like a rebrand where we're focusing more on financial literacy. But the actual story is that financial literacy has changed. Sure. In the past, it used to be like, save, do this, do that. It was very simple. Budget, buy land, etc. So these days, it's more of all these technological options for you. You can now borrow and get a loan on your M-Pesa. So how do you start to think about financial literacy and how you manage your money in this new world? So that became now our focus as Tala, because we had a responsibility to our borrowers. So far, we've lent to over 3.5 million Kenyans. So how do we actually help them understand what this new normal of how money works and how money moves truly looks like? And it actually, I think our focus really shifted to this 4 years ago, where every March we started to do something called Money March. So Money March is where we dedicated the month of March to purely focusing on financial literacy. So personal finance, how do you think about finance for your business? How do you manage your money? How do you think about responsible borrowing? So all these have been themes for the last 4 years. And on Money March, we also normally release a report that just kind of shows, okay, what do consumers want? How are they using money, etc. Yeah.
Amazing. That said, I'm very sure you have access to data on the borrowing trends. And if I'm getting this from there's one conference I attended, and one of the people there was saying that why the friend exited that lending market is because he was seeing as though he's aiding quote unquote sin, because people are borrowing at very weird hours of the night, 2 a.m. for obvious reasons. Sherehe imeshika, pesa ya mzinga ito. And guys need money. Where I'm driving towards is the intention of lending or of borrowing rather, because it's now coming from source. Brian wants this, so if he doesn't have the money right now, he's gonna get it from whoever. There's so many lenders that are there in the market, the Shylocks and all that. What are some of those trends that you've noticed as Tala in your operations over the years, 8 years or so, in the Kenyan borrowers borrowing trend?
Yeah, for sure. So ours have been slightly different. Okay. Well, technically, I don't have data on at what time guys got a loan. Okay. Ours we're so automated in how we operate and how we give loans. Okay. So I don't have that information. But what I know is we have actually seen something consistent over the last 2 years that surprises me a bit. When the people asking for a loan, they normally say that it's mostly for a personal reason. But then when we do let me call it self-reported research after, they tell us that they used it for business, which for me was quite interesting. So another way to put it is maybe 40 to 50% of people will tell us when they're borrowing that they'll use it for business. But later, after we ask them what they use for their money, it becomes 70% of guys who say they used it for business. So it took me a minute to understand. I was like, what is going on here?
Reminds me, there's a politician who said, unasema ukweli, unasema uongo, unachanganya. Anyway.
Yeah. So
when they tell you, wow, that's interesting reverse psychology, because when they tell you they're borrowing for personal reasons, they go and use business for it.
But I don't even think customers do it intentionally.
Okay. Sorry, allow me to stop you in your tracks. How does that play out with the element of risk? Because this is a lot of risk. I totally understand. There's no security, so of course, how does that impact you people and especially on the risk element around the lending? Tell me about it.
It doesn't as much, right? Because and it will actually come to the example I wanted to give.
Fine, go ahead.
So what we realized is Kenyans have side hustles. Many Kenyans have side hustles. So you find that so
my bosses are listening.
I know. It's okay, anyway. Brian. Tatuambia side hustle yako ni gani?
So a year is too long to be paid 12 times. Sorry, go ahead.
No worries. So we realized that a lot of Kenyans have side hustles. Because you see, when we're underwriting and deciding who to give a loan, we look at three things. So fraud, of course. We have to make sure you're not a fraudulent party. Number two, it's ability to pay. We'll never give you a loan if we believe you don't have the means to pay us back. Because otherwise we're over-indebting you. Or giving you something that we know you wouldn't be able to pay back. Then the other bit is like some signals of willingness. Willingness means that this customer wants to pay you back. Sometimes someone can have money and not want to pay you back. So we've built like a machine learning model that is able to pick this up, and we have like thousands and thousands of features that look into this. So that said, if you've already passed that ability check, then we are comfortable. We believe that you'll actually be able to pay us back. So you find that a lot of people are actually salaried. So when they're borrowing, probably they were saying, okay, I want to pay rent, I want to pay school fees. Then they're like, I could actually use this money to put up a cuckoo business behind my house, right? And grow some broilers. So they end up diverting that money to a side hustle.
In short, I'm Kombali na Hustler Fund.
Anyway, go ahead. But so they end up diverting that money to actually a side hustle. So for us, when we do research and ask customers, so what did you actually use your money for? You find 70% of borrowing on Tala is actually for business. So the people who are literally the day-to-day job is business. And then there's this group of people who are full-time employed, but they have side hustles. So they borrow from Tala to set up their side hustles. If it's a shop, they hire someone to sit at the shop. Or like if it's it's selling clothes, they have someone there, or an M-Pesa shop, they have someone there. And then they actually go to work every day. And then, they have this supplemental income. Yeah.
Amazing. It's a very interesting checklist that you go through before you lend out to somebody. So how come this money is sometimes given out in less than 10 minutes or so? Of course, I know there's the bit of credit history, which impacts on somebody's credit worthiness in the long run, basically credit score. But how does it happen that 10 minutes pop?
It's called the power of tech, Brian.
Tell me about it.
So I don't know how familiar you are with like AI or machine learning.
Yeah, I'm pretty much in the tech world.
And I don't know if people on who are listening to the podcast have played around with things like ChatGPT and so on. But that's ideally like we've built a model that it just ingests the data that you're giving us. And when it ingests the data that you're giving us, we are able to make an instant decision. So that's actually the innovation in itself. So if you think about it, Tala is actually more of our value is being a data science company, truly. So that's actually how we're able to make very fast decisions. It's just the power of tech.
Amazing. So the instant gratification culture, where people want it now, they don't want to wait, they don't want to save, where you don't want to, okay, fine, you set a goal, but you tell yourself, I want to get it next week or now. I mean, as soon as possible. Whereas previously you'd find, and somewhat there are people who say it's a generational thing. This is me hypothetically thinking. Today, I am more likely to want to buy, for example, I'll give an example of a car. Today, I'll want to give an example of a car. Or let me use something simpler. There is an iPhone disease in this country right now. Everyone wants to own an iPhone, and because I'm looking at also the limits that you guys have as a micro as a digital lender. you're within that region. So somebody says they come and look at Val's phone and they're like, oh my god, I also want an iPhone.
Yeah.
But if you look at it, you can actually save up towards it up until maybe June when it's your birthday, so that you're able to afford that iPhone. Somebody wants that now, and that is going to eat into their finances and not helping them achieve their goals. Have you had experience with such kind of a thing?
Yeah, maybe I'll talk about it more from a personal standpoint, because even if you look at us as a lender, of course we cannot wholly dictate what someone uses their money for, but we index towards people who are using their money for I don't want to say the right reasons, but healthier habits. So for example, we would not lend if you tell us you want to take your money and bet. That is because that is an unhealthy financial habit. However, that said, as an individual, my personal philosophy is pay yourself first. When you get your salary, pay your bills second, and then budget for your fun. Budget for your fun, because I think so what I mean by pay yourself first is save money. Like, you see, the same way when your salary comes in, it's your 30k, 50k, 100k, rent, you don't play, you send it. Set the same target for yourself with savings. So you're paying yourself first, so you put X amount. So for me, I try to put at least 30% aside before I even do anything. 20 to 30%. Put it aside, pay yourself, pay your bills, and then budget for your fun. So that when you budget for your fun, nothing will surprise you. If what makes you happy is you wanna save some 5k, 10k for sherehe, then plan for it, so that you're not surprised later on.
That's interesting, and I hope the listener and the viewer is taking note. What most people do is, and na unajijua kwa roho, beba mkono kwa roho. Because I'm getting some reverse engineering around that. What people normally do is, do imeingia pap iko kwa account, the first thing is sherehe vibes nini, then all those things come on later. And I don't know why most salos hukuja weekend. I don't know.
I think Friday. Someone in HR plans this. They're like, it's Friday, click the button.
Where is Mbugwa wa finance? Tuma. Anyway, so what I'm getting from your analogy is that, look, take that 30%, put it aside for yourself first, and then the other basics follow. Not the reverse of what most people do. People normally start with fun, and then now they save from now what remains.
What remains,
yeah, that's an interesting phenomenon. Tell me about it.
Yeah, for sure. And that's why I actually call it paying yourself first.
Okay.
Because saving is money for you. It's money that will help you if you have an emergency. You get to buy yourself that nice thing you wanted, whether it's a watch or a phone or a laptop or a holiday. You're saving up for everything. So ideally for me, it's just more of a frame of mind or a shift of thinking, where you're like, okay, I deserve this, so pay yourself first. It's for you, it's not for anyone else. Then pay your bills, because you don't want to be stressed, you don't want to be homeless or struggling in the middle of the month, not having fare. Then after that, leave a little for fun, because
you've got to leave, man.
It's good to leave. And you're also ensuring that later you're not surprised and you want to have fun and you don't have the cash. So for me, it almost goes back to the traditional FILIT that I was talking about, which is budgeting. But it's budgeting with a flavor, right? It's budgeting for your needs and starting with yourself, because everything, all the three things are to make you happy. So you're just planning for them and pre-planning for them. Then last thing I'll mention is just a plug for goal-based savings. It's such a powerful thing, and there's so many actually like fintechs that are in the market right now that are supporting different young people on this. A good example is a company like Koa. So and these are founders that I'm very familiar with, and I think what they're doing is pretty amazing.
Kidano.
So it's ideally, if you want to have something, just plan and save for it. Just get better at planning, because if it's a holiday, you'll need to go somewhere in December. That in January. If you start putting 2k, by the end of the year, you're in a better place.
Exactly.
So it's just building that discipline.
Na kusahau, unatuma na unasahau huko.
Exactly. You cannot even reach it in the first place.
You can't
so
even access
good.
it. So what's your ideal lock savings, or what would you advise? Of course, this is not financial advice. We're just sharing information, by the way, for the listener and the viewer out there. So the decision now lies purely with you, because there are various instruments out there that can help you to do that. But there's a joke online that says you save your 2K today, the next day it's saving you.
And I get you. So I don't usually think it's an either or. My personal philosophy is, so let's assume we were talking about that 100K or 50K salo. So we talked about 20 to 30% going to savings. So you already have that 20 to 30%. Then out of that, how do you split your 30% into each of these buckets?
20 minutes past the time, we are speaking to Stella Mumbi on the instant gratification and ego adversaries that keep you in that financial rat race. You're constantly in that same place. You're never moving. You're borrowing. You're living on loans. You're doing this. You're doing that, and you're never just seeing that impact in your life. So she came loaded with a lot of advice, as you can hear. So now, how do we deal with emergencies, and especially for people who have not had that culture of building, or rather keeping an emergency fund? For example, there are those guys who unfortunately they are not able to save because maybe there's black tax here. They're taking care of ex-family member who has to study off of them. Now, we are in Africa, and
black tax is real.
We actually have a conversation on that in one of the next episodes. So
it's a big one. It's a big one. Yeah.
So talk to me about that for a moment. How Brian, for example, as an individual, can handle that emergency call at night of mama amevunjika mguu, we are taking her to hospital XYZ, we need to have this done.
And to be honest, my de facto answer is always plan for emergencies. But we're also talking about a scenario where we've not been taught to plan for emergencies and save for emergencies. However, I'll still make a plug for that in terms of anyone who's listening and is thinking, what can I start doing today to be ready for that future state? Think of the 4 examples I gave of how you split your savings. The first one, which is easily reachable money, make that your emergency cash or emergency saving. However, with my Tala hat on, we've actually seen a lot of customers actually borrowing because of emergencies. And these are customers who even message us later and tell us amazing stories. I remember a story from a customer who was telling us how they were trapped in Kenyatta. So I think it was a child who got sick. They didn't have the money. They went to the Tala app, got a loan, and sorted that out. Because one thing I always like to say is loans are not bad. I think the challenge with loans is when you take a loan and you take a loan and you're unsure of how you'll be able to repay it. Actually it's pretty much that. Or take a loan for quote unquote not the right reasons, and it over indebts you. So however, in such an instance, this is someone who's salaried. They know their salary will come end of the month. However, right now they have an income gap. They're thinking, oh my God, what am I gonna do? I need to pay this bill. The insurance is not working, or I don't have insurance. So in such an instance, then you're able to access credit to close an income gap, and that's actually the power of credit. Because I don't usually believe that you should never take a loan. If you think about it, some of the biggest industries and biggest businesses that we even see in the world are actually built off of credit. So credit is really powerful. The only challenge is usually how do you use credit, and that is the knowledge that we need to build with young people. It's how do you actually use credit to help you in case you have an income gap in a reasonable way, of course. Or number 2, to actually help you grow your income, which now becomes one of the more powerful use cases of credit.
Amazing. And Mumbi is very spot on, because you notice credit is not taxed, by the way. It's very, very interesting. And there was a quote by someone, and I've mentioned this in our previous episodes where we were handling managing debt, that credit is a debt is like a loaded gun. Depending on where you point it, it may benefit you or it may harm you. Yeah, there you go. We're edging closer to the close of the show today. A lot of conversations, but by the way, that bit of the hospital really touched me.
Let me tell you, Brian, those are the things that personally for me make me love my job. just because we have like this Slack channel within our Tala business where customers send us like comments and thoughts and how Tala has supported them. So anytime work gets hard, we usually just go and read it and we're like, oh my God, like we're helping people. This is how we're impacting people's lives. And it's always so lovely. Also like the App Store comments. It's very interesting. Kenyans come and like they'll literally write there, thank you Tala, you helped me buy this, cuckoo that did what, I can now pay my rent, etc. Yeah, it's amazing.
I can imagine.
Yeah.
Oh, great. Okay. Well, I'm personally I'm personally changing my and by the way, because I try to really live within my means, so I don't have the Tala app on my phone. Do you guys have that option, or have you thought of that option of having a savings section? I don't know. Is it something you're working on?
Yeah, for sure. It's something we're working on. Okay. So actually, I forgot to even mention. So right now, if you have the Tala app, even if you don't have a loan, the middle button is something we call the Land Center. So it's quite interesting because I've not seen this with any other lender. But Tala created a whole Land Center where you can access financial literacy instruments. Yeah, so it's blogs, it's courses, etc. Like on budgeting, saving, building your business, etc. Okay. Then on the same page, you can actually also join the Tala Biashara community. So we created a business community after we noticed so many people were borrowing for business. And now we usually do a lot of support to them. So sometimes we pay for sessions with Centonomy so that they can get training. A year back, I think I did business grants where we give like, non-refundable money and business skills training to a couple of businesses. Okay. So these are things that we keep doing there. So plug for anyone who's looking for content. You can download the Tala app. Even if you don't need a loan, you'll be able to access the Land Center. But in addition to that, yes, we are looking to grow. So this actually came from feedback from our customers. They were telling us, hey Tala, I've been borrowing from you guys for 7 to 8 years. Can you help me save? Can you help me invest? Can I send money to Tala? So right now, in the course of this year, we're actually evolving into more of that, where we're thinking about how do we become like a full service financial provider for Kenyans. Okay.
More like a super app now.
Yes, I wouldn't call it a super app because I personally don't believe in it. Like the super app concept is
neither here nor there.
Because sometimes
what does that make the other app?
not even that. Okay. I think sometimes you find that fintech companies just put a bunch of features that are not really needed by customers. Okay. How we're growing and doing it is we're asking our customers, hey, what do you want? What do you need the most? Then that's how we build.
It's consumer-driven development.
Exactly. It's consumer-driven financial services. Okay. So because I think sometimes super apps is just like we need to put everything and exist in an app. And I don't think Tala will look like that.
It gets noisy. It's so busy.
You're stressing people.
Where is that button?
Someone is just looking for a specific thing. So for us, we're growing very mindfully. Okay. And it's very customer-driven. But yes, future state, I'll let you know when you can come save and invest with Tala.
All right, let's finish na swali la kizushi ambalo nikuuliza before we start this conversation. It's a question I ask every guest that comes here. What is the worst financial decision you ever made?
When you asked me this, I've been thinking about my story. It's one from uni. It's a long time ago. Okay. So
how long ago? It's okay. Go ahead.
I'm gonna tell you so that you calculate. Okay, cool. So I was in JKUAT, by the way. Okay. So I was studying engineering in JKUAT.
JKUAT.
Yes, Juja boys.
Whoa. Engineering, and then you got to financial services. Okay, I'm interested.
Yeah, it's tech. It's still tech.
Oh.
Yeah. So I just went to the business side. Okay. But I'm still doing a lot of technical things. Okay. But yeah, so in JKUAT, and we used to see, like, by the time you walk from where your house is to the stage, your shoes get dusty. So me and my friends were like, oh, we should pull money and save up. I think we each invested like 30K in JKUAT.
Back then, that was a lot of money.
And then we were like, let's put this is from our hustles, from our side hustles.
Oh yeah.
And they said, let's actually build a shoe stand by the stage in Juja, so that you get off the mat, you can polish your shoes before you go to Tao. Yeah. So what we didn't do is market research. We never did market research. we never understood the permits and what you need to actually do that type of business.
JKUAT ikamwambia kuja wewe, kujeni.
It wasn't even JKUAT. So we literally made a whole shoe stand and everything, invested money.
Whole structure.
Yeah.
Okay.
We came there. Kume we hadn't talked to like the Buddha guys and the Buddha Association. So whenever we put it up, they would drop it. And then we just ended up not being able to operate completely. My lesson here was, this was one of my earliest lessons. I think I was in like second year. My earliest lessons in business. Number 1, invest in things you understand. Number 2, do your research. Number 3, ensure you fully understand the licenses you need. Because now we ended up losing like so much money. I think, was it 20k or 30k per person? I can't remember. But it was a significant amount of money per person.
Considering your students, man, that's like a whole lot of money.
Yeah. And I was like, and I was looking at my classmates who'd opened like gaming centers and that. I'm like, I should have opened a gaming center.
What was I thinking?
Yeah, I understand FIFA. I don't understand this other business.
And of course, you're in tech at that time, and you're like telling yourself, these are things like we can easily maneuver and work around.
Exactly.
And then it's also fun.
Exactly. So that was my lesson there. So learnings. If you're thinking about your side hustle or business, be smart about it. Do your research. Make sure you understand. Go into industries you understand. Do things you understand.
I get it. It's not all doom and gloom. You learned. And so here's the other question. What's your best decision you've made with money?
I've been thinking about that one, and I would say I'm still making good. I'm still trying to get there, but let me think of one. I'd say there's actually an investment I made with my mom that was a really good idea. So why are you swelling?
This is new because who invests with their mom?
Nilikubeba miaka 9.
I carried you for 9 months in my story.
Actually, I'm going to even change my answer. Let me even not tell you that one.
Go ahead. Yeah.
But yeah, anyway, one of the best ones I've made so far is actually my SACCO. I joined a SACCO.
Wow.
Which is quite interesting because I noticed most young people and young professionals don't belong to SACCOs. I think the SACCO age is people 35, 40 plus. But I actually ended up joining a SACCO, and I joined my mom's SACCO. So I'm in a SACCO with like public service people,
okay,
which is quite interesting. But I think one thing that it forced
those are
me,
the oligarchs, my friend.
I know. Those are it's a true SACCO.
Oligarchs.
Yeah.
Because job security and everything. So again, it's just a check off. Your mom just knows in her pay slip anajuanga tu kuna kapesa kanaendanga kwa SACCO. So it's so consistent.
Yeah.
And like sisi watu wa vibes.
So, and that's exactly, actually that was a perfect plug because that was like, I'll change my answer. I think SACCOs are like, it's a big thing, and I've seen a lot of young guys actually looking at which SACCOs do I join.
Yeah.
There's so many SACCOs. You don't even have to belong to the companies or, like I've had people joining Steamer SACCO, Safaricom SACCO. Yeah. I think it's called Temple SACCO for ABL. Like there's so many SACCOs that you can be able to join. Yeah. And they help you to, number 1, save. Then number 2, when you're actually looking to make big life decisions, you want to buy that land, you want to buy a car, you want to buy a house. Yeah. You have your savings, you can borrow up to 4x of how much you've actually saved. And you manage to have the funds to do it. So I think additional thing I'd say is, join a SACCO, start putting that 5k, 2k, 10k away. You can imagine where you'll be in 20 years or 30 years when you're retiring.
But people don't have that patience. Instant gratification. That's what we're talking about here.
Yeah. So, no, I hear you. So, and I think it's one of those things you have to like teach yourself and learn because it's you wanna and it comes back to if you have instant. I don't think instant gratification is always a bad thing. Just plan for it. That's what I was like. Plan for your fun. Good. Plan for sherehe. Saving your SACCO at the same time, and you're good.
Amazing. Oh my God. She's given us more than we needed. Thank you so much, Anstella. We've been speaking to Anstella Mumbi from Tala, good friend, an old friend, I want to say. Okay.
I can be a good friend too, Brian. Cool.
Let's end the show. Anyway, but yes, no qualms, man. Yeah. Thank you so much for coming.
Appreciate it.
And for being the first lady on the podcast. This is quite an honor. Yes. Thank you so much. And we've been speaking about instant gratification, and she said 3 things: plan, plan. You can achieve your goals, but only if you put a good plan in place. Thank you so much. My name is Brian Josetiana. You can call me Branji. See you on the next one. Continue being prudent with your finances, and I hope you achieve all your goals. And we'll see you on the next one.